So over a year ago, I made a video series in which I went in depth on all the holdings inside of my portfolio, and I brought up how much I was making from each one. A lot of that series is now outdated as I've sold a number of positions in my portfolio and I've since added several more. My portfolio size has also increased by roughly 46% since that series started about 16 months ago. So in this video today, out of the 29 holdings that I currently have in my portfolio, I want to give an update as to what my 3 largest holdings are by total amount invested. I'll also show how much I earn in dividends on a quarterly and a monthly basis from each holding. Starting off with my third largest holding right now is Blue Owl Capital Corporation, ticker OBDC. According to my Vanguard account, I currently own roughly 815.043 shares of this stock. With its latest quarterly dividend being for 37 cents per share, right now I currently earn $301.56 every quarter, or roughly $100.52 a month. That comes out to a grand total of roughly $1,206.26 in dividends every year, which does not include special dividends, which OBDC has been paying a lot of while interest rates remain high. I also currently reinvest all of my dividends, so this ultimately will be higher since I'm buying new shares with all of my dividend money. Blue Owl Capital is a business development company that I cover pretty regularly on my channel. It just recently became my third largest holding after its share price fell pretty sizably, and I wanted to take advantage of it by buying more shares of it. Just a few weeks ago, my third largest holding was Main Street Capital, ticker MAIN. However, I haven't bought any more shares of this stock in quite a long time, honestly, given how overvalued it currently is. I'm still reinvesting all of my dividends for it though, so that's how it's continued to grow for me. But according to their website, Blue Owl describes themselves as a specialty finance and a business development company that provides direct lending solutions to US middle market companies. Their portfolio consists predominantly of senior secured loans that are directly originated by Blue Owl Credit's team of investment professionals. They're in the process right now of actually going through a pretty fundamental change. For some reason, back in January, Blue Owl decided to come out with another BDC, which is titled Blue Owl Capital Corporation 3. Trading under the ticker symbol OBDE, this BDC was very similar to OBDC, with really the only difference being that it was a little more conservative in terms of what they provide financing for. Earlier this month, after just 7 months of being publicly listed, the company announced that they'd be merging the two BDCs together, with OBDE merging into OBDC. Ultimately, this is a good move that'll benefit OBDC. They'll get OBDE slightly more conservative portfolio, and OBDC will become the second largest BDC in the whole sector. So more details are still to follow, and we don't yet know what the end result will look like here. I thought it was pretty funny how in the press release it says, the board of directors of both OBDC and OBDE have unanimously approved the transaction when they're both the exact same people for both companies. Moving on now, my second largest holding is currently Aries Capital, ticker ARCC. Right now I currently own 774.997 shares of this stock. With their quarterly dividend being for 48 cents per share, this means I receive roughly $371.99 per quarter. That would translate into $123.99 if you want an idea of how much that would be from a monthly perspective. Just like with Blue Owl Capital, Aries has paid special dividends at times, although they've been chosen to be a lot more conservative this year. Without taking any supplemental dividends into consideration, ARCC currently pays me a little under $1,500 a year. Again, I'm reinvesting all of my dividends here, so each quarter my distribution amount goes up. So in a year, it'll be a little more than this. Aries Capital is my favorite BDC, and they're also the largest in the sector. With a portfolio value of over $25 billion, this company continues to be very well diversified across asset classes and sectors. Unlike Blue Owl, which we just looked at, they hold a lot less senior secured loans and interestingly hold a lot of preferred equity. The vast majority of BDCs that I've come across dedicate only about 2 to 3% of their portfolios to preferred equity, so it was a little unusual to see this. But the results they post year after year speak for themselves, and preferred equity is still a pretty safe investment. As of last quarter, they reported their non-accruals make up just 1.5% of their portfolio. This is significantly less than the BDC average right now, which is 3.8%. There's really several more reasons why I like Aries Capital more than any other BDC besides their size and their low non-accruals. They're one of only a few companies in this sector that were around during the financial crisis. There were a lot more BDCs back in the day, but a number of them got swallowed up in the form of mergers and acquisitions into other BDCs following 2008. They did experience a dividend cut, which is really not a surprise for this time in this sector, but they have since grown it even higher. Considering this was the most severe crisis since the Great Depression, Aries made it out pretty well in my opinion compared to most of their peers. In the event of another worldwide recession or some other kind of strange event happens, they'll have the experience on how to deal with it. I have seen a lot of people complaining about this company this year for their lack of dividend growth or any special dividends coming from Aries Capital. As of last quarter, their regular quarterly dividend was 121% covered, so some people were expecting some kind of additional distribution this past quarter given how well they've been doing. However, I'm perfectly okay with them not increasing the dividend. Their stock currently yields over 9% already, and since it's clear that they're prioritizing safety, I'm fine with them fortifying themselves in case things take a downturn in the economy. It's for that reason that I really wanted Aries Capital to be my largest BDC holding. I would likely have more confidence in this BDC than any other in the event of a major recession. The good news though is that appears to be very unlikely according to most economists that I've read recently. And now my largest holding, as you might be aware of already, is Realty Income, ticker O. I currently own 457.586 shares of their stock. Unlike Aries Capital and Blue Owl Capital, Realty Income does actually pay monthly dividends. Their stock currently pays 26.3 cents per share per month, which means I collect roughly $120.34 a month. Just slightly less than Aries Capital, but Realty Income yields much less than that stock. In total, I receive roughly $1,444 a year from this stock, which is known for increasing their dividends every quarter, and again, I reinvest all of my dividends. Realty Income is my favorite stock, and it's one that I've made mistakes with in the past. I've been open about the fact that a while ago, I bought a very large number of shares of it at a really bad time. In a video I released back in January, I revealed that I was down roughly $5,500 on my investment in Realty Income. People have asked me if I was concerned about being down so much, but I really wasn't. I knew that it was due to interest rates being raised and the company was still well off and growing significantly. Since 2021, Realty Income has more than doubled in size, growing from 6,600 properties to now over 15,000. REITs in general have seen a very nice surge in the past few months, with Realty Income experiencing one of the best recoveries. Today my investment has recovered quite a bit and I'm down a lot less now. When rates get cut, then REITs will likely perform even better as conditions for these debt-heavy companies will improve. In terms of their most recent quarter, everything has been doing just fine for them. They reported AFFO per share of $1.06, which is an increase of 6% from this time a year ago. With their dividend being 26.3 cents a month or 78.9 cents a quarter, that gives them a payout ratio of 74.4%. This is very comfortable for a REIT, and every REIT typically likes to be in the 70 to 80% range. Their occupancy is currently 98.8%, which is far above average, and despite some of their tenants announcing store closures. One thing I hear from critics is that Realty Income won't have a lot of attractive opportunities for building acquisitions in the future given how big they already are. However, they estimate there's still $5.7 trillion worth of addressable real estate in the sectors they like to target. In addition, they've been ramping up their efforts to acquire more properties across Europe, which they estimate to have an $8.5 trillion market. So given the fact that Realty Income pays monthly dividends, has never gone through a dividend cut, offers consistent long-term growth, and a wide mode of protection, I'm still pleased that they're my largest holding. It's true that their growth isn't spectacular, and in some ways, Agree Realty, which I also own, is currently doing better. But they did go through a pretty sizable dividend cut in the past. However, they have increased it to way beyond what it was before the cut. Ultimately, Agree Realty is a really solid alternative to Realty Income if you prefer them instead. I'll likely work on growing my position in ADC more aggressively than Realty Income for the time being. And that's going to conclude our look at my top 3 largest holdings by total investment. Overall, I haven't been too aggressive in buying more shares of Aries Capital or Realty Income in the past 6 months, as I've been focusing on my other 26 holdings. But the reinvested dividends are so significant with them that it's making a big difference in my dividend snowball. Thank you all so much for watching. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.